The system is not broken. It was never designed for you to win. American banks collected $12.1 billion in overdraft fees alone in 2024, $64 billion in overdraft fees over the last 5 years. More than 56% of Americans cannot cover a $1,000 emergency expense, and yet banks are posting record profits every single quarter. This is not a coincidence. Banks use specific, deliberate, psychologically engineered tactics to keep your money flowing to them and away from you. Today, we expose every single one: the hidden fee traps, the interest rate manipulation, the dark UI patterns, the guilt trips, the commission-based advice designed to make them rich, not you. After watching this video, you will never look at your bank the same way again. Dark trick number 1: the overdraft trap. And this one is the most insidious of all. Here's how it works. You have $50 in your account. You buy a $5 coffee. The bank approves the transaction, even though you technically don't have enough money after a pending charge processes. Then they charge you a $27 overdraft fee for a $5 coffee. That's a 540% penalty. But here's where it gets deliberately evil. Banks were caught and sued for reordering transactions from highest to lowest dollar amount instead of chronological order, meaning they would process your largest purchase first to drain your account faster, then hit you with multiple overdraft fees on smaller purchases that came before the large one chronologically. Harvard Business School research confirmed this practice. Banks that did high to low reordering generated $1.3 billion extra per year in fees. Bank of America was fined $250 million for this exact practice. And in 2026, regulators finally passed a junk fee ban, targeting the worst of these tricks. But many banks are still finding creative ways around it. Dark trick number 2: the savings account lie. Your bank savings account is paying you 0.01% interest. 0.01%. Meanwhile, inflation is running at 3 to 4% in 2026. That means your money in a bank savings account is losing 3% of its purchasing power every single year. And here's the part banks never tell you. High-yield savings accounts at online banks are paying 4.5 to 5% interest. That's 450 times more than what your big bank pays you. The same FDIC insured, the same safe, just 450 times more money. Why does your bank pay 0.01%? Because they take your savings, lend it out to other customers at 7 to 24% interest, and pocket the difference. They need you to be financially illiterate about this, because the moment you move your savings to a high-yield account, they lose their cheapest source of funding. Banks earned $686 billion in net interest income in 2023, much of it from this exact spread between what they pay you and what they charge borrowers. Dark trick number 3: the minimum payment trap. This one is pure mathematical genius, designed entirely against you. You have a $5,000 credit card balance at 24% interest. Your minimum payment is $100 per month. If you only pay the minimum, it takes you 94 months to pay off that balance. That's almost 8 years, and you'll pay $4,311 in interest on top of the original $5,000. You'll pay nearly double the original amount. And here's the psychological manipulation. Banks designed minimum payments to feel comfortable. $100 sounds manageable. They want it to feel manageable, because the longer you carry that balance, the more interest they collect. Credit card companies collected $130 billion in interest and fees from Americans in 2023. And here's the darkest part. The minimum payment is specifically calculated to keep you in debt as long as mathematically possible, while making you feel like you're making progress. Dark trick number 4: dark UX patterns. This is the newest and most sophisticated weapon in the bank's arsenal, and most people have never heard of it. Dark UX patterns are deliberately confusing interface designs, built to make you click the wrong thing, built to make you agree to fees you don't want, built to keep you paying for services you don't need. Here are real examples documented in 2026. Pre-checked boxes when you sign up for an account. Extra fee-based services are already checked. You have to manually uncheck them or you're automatically enrolled. Guilt language. When you try to decline overdraft protection, the button says, "No thanks, I don't want to protect my account," making opting out feel irresponsible. Closing accounts made deliberately complex. Opening an account takes 3 minutes. Closing one requires calling, waiting, being transferred, being offered retention deals designed to make you give up. Hidden fees surfacing at the last moment after you've already committed emotionally to a product. The Reserve Bank of India actually mandated banks ban dark patterns by July 2026. American regulators are still catching up. Dark trick number 5, the commission-based advice trap. You walk into your bank, you ask for financial advice. They send you to their in-house financial advisor. And that advisor sounds helpful, looks professional, uses all the right words, recommends products that pay them the highest commission, not products that are best for you. Whole life insurance policies that pay advisors 50 to 100% of your first year premium in commission. Actively managed mutual funds with 1 to 2% annual fees, when index funds do the same job for 0.03%. Investment products that lock your money up for years because the bank earns fees the entire time. A 2023 study found that broker-sold mutual funds underperformed by an average of 1% per year compared to advisor-sold funds. That 1% difference compounded over 30 years on a $100,000 investment costs you approximately $174,000. Almost $175,000 lost because your bank advisor recommended what paid them most. They are not your financial advisor. They are a commissioned salesperson wearing a suit. Dark trick number 6, the loyalty penalty. You'd think that being a loyal, long-term customer would earn you better rates, better service, better deals. You'd be wrong. Banks consistently offer their best rates, lower mortgage rates, higher savings rates, better credit card deals to new customers, not to loyal ones. Your mortgage rate? New customers are being offered rates 0.25 to 0.5% lower than what you're paying right now. Your credit card rate? New customers get 0% introductory offers. You're paying 24%. Your savings rate? New customers get promotional 5% rates. You're getting 0.01%. Studies show that switching banks can save the average American $300 to $500 per year in better rates and lower fees. But banks make switching deliberately painful. Closing accounts, transferring direct deposits, updating automatic payments, the friction is designed to be exhausting. Because the moment you get comfortable and stop comparing, they charge you more. Loyalty in banking is literally punished. Dark trick number 7, the debt identity trap. This is the most psychologically sophisticated trick of all. Banks don't just want you to borrow money. They want borrowing to feel normal. They want debt to feel like just part of life. Like everyone has a car payment, everyone has a mortgage, everyone carries a credit card balance. They spend billions on advertising that normalizes debt. You deserve it now. Buy today, pay later. You've earned this. They've engineered an entire culture where a 30-year mortgage feels responsible, even though you'll pay double the house price by the end. Where a car payment feels normal, even though you're paying 7% interest on a depreciating asset. Where carrying a credit card balance feels like just how money works, even though you're paying 24% on purchases you already made. The wealthy understand something most people don't. Interest is a tax on the financially uneducated. When you pay interest, you are transferring wealth from yourself to the bank every single month, automatically, forever, until you stop. Dark trick number 8, The information asymmetry weapon. Banks know everything about your financial behavior. Every purchase, every balance, every time you're close to overdraft, every pattern, every vulnerability. And they use this information against you. When you're close to overdraft, they conveniently offer you overdraft protection at 18% interest. When your balance is low, they target you with credit card offers at 29%. When you've just made a large deposit, they call to recommend their managed investment products. Their timing is not accidental, it's algorithmic, designed to reach you when you're most financially vulnerable and most likely to say yes to products that benefit them. Meanwhile, you know almost nothing about what they do with your money, who they lended to, what they invested in, what risks they're taking with your savings. A 2024 bank rate study found that most Americans can't accurately name the interest rate on their own savings account. Banks benefit enormously from this knowledge gap because an informed customer is their worst nightmare. So how do you fight back? 6 specific moves that take back your financial power. Move 1. Switch your savings to a high-yield savings account immediately. SoFi, Marcus, Ally, or American Express savings are all paying 4 to 5%. Move 2. Set up low balance alerts on your phone. Never get hit with an overdraft fee again. Move 3. Pay your credit card balance in full every single month. Not the minimum, the full balance. 0 interest ever. Move 4. Never take financial advice from your bank. Use a fee-only fiduciary advisor who legally cannot earn commissions. Move 5. Shop your mortgage and car loan rates. Get at least 3 quotes before signing anything. The difference can be hundreds of thousands over the life of the loan. Move 6. Read your bank statement every single month. Every line, every fee, every charge. Contest anything you don't recognize. Banks collected over $5.8 billion in fees from people who never questioned them. Don't be one of them. Here's the bottom line. Banks are not evil, but they are businesses, and their business model depends on you being financially passive, on you not questioning your savings rate, on you paying minimum payments, on you clicking the pre-checked boxes, on you trusting the advisor who earns a commission. The moment you become financially informed, you stop being their ideal customer. You start being your ideal customer. The system was never designed for you to win, but now you know the rules, and knowing the rules is how you change the game. Subscribe, because next week we're exposing the dark psychology credit card companies use to make you spend more than you plan to every single time you shop. It's even worse than what banks do. You don't want to miss it.